RBI's intervention in the money market, refinance, marginal standing facility, and liquidity adjustment facility. In order to control the liquidity position in the financial system, RBI regularly intervenes in the market or to inject liquidity when there is a shortage of liquidity. There are two important ways in which RBI intervenes in the money market are through its standing facility or refinance and liquidity adjustment facility (LAF). The central bank provides liquidity to the bank when the bank faces shortage of liquidity. This facility is provided by the central bank through its discount window. Commercial bank can borrow from discount window against the collateral of securities like commercial bill, government securities, treasury bills, or any other eligible paper. In India, this type of support of the central bank earlier took the form of refinance of loan given by commercial bank to various sectors such as export, agriculture, etc. Under this facility, commercial bank could borrow from the RBI center a certain percentage as specified by the RBI from time to time of the loan given by them to specified sector. RBI used the sector-specific refinance facility as an instrument of credit policy to encourage or discourage lending to particular sector by varying the term and condition of the refinance. The Reserve Bank of India introduced a new Marginal Standing Facility (MSF) scheme on its monetary policy for the year 2011-2012. Under the new facility, bank will borrow overnight up to 1% of net demand and time liabilities outstanding at the end of the second preceding fortnight. The MSF will be 100 basis points above the repo rate, the rate at which the bank borrow from RBI. All scheduled commercial banks that have current account and subsidiary general ledger account with the RBI are eligible to participate in the MSF. BI will receive request for a minimum amount of ₹10 million and in multiple of ₹10 million thereafter. The central bank has the right to accept or reject partially or fully the request for the fund under this facility. The Reserve Bank of India new Marginal Standing Facility will help it to curb volatility in the overnight lending rate in the banking system. In a quantity-based monetary targeting framework, reserve money (RM) was used as the operating target and bank reserve as the operating instrument, with broad money (MT) being the immediate target. In the current monetary operating framework, reliance on the direct instrument of monetary policy has been reduced and the liquidity management in the system is carried out through open market operation in the form of outright purchase, sale of government securities and repo and reverse repo operation under Liquidity Adjustment Facility. OMO are supplemented by access to the Reserve Bank's standing facility combined with direct interest that signal through change in the bank rate or repo rate. In this Direction: the LAF introduced in June 2000 has now emerged as the principal operating instrument of monetary policy. The LAF enabled the Reserve Bank to modulate short-term liquidity under varied financial market conditions in order to ensure stable conditions in the overnight money market. The LAF operates through daily repo and reverse repo action, thereby setting a corridor for short-term interest rate consistent with policy objective. Although there is no formal targeting of overnight interest rate, LAF operation has enabled the Reserve Bank to de-emphasize the targeting of the reserve and focus increasingly on the interest rate. This has also helped in reducing CRR without endangering liquidity pressure. On the recommendation of the RBI Center Internal Group, RBI has revised the LAF scheme on March 24, 2004. Under the revised scheme, RBI will continue to have the discretion to conduct overnight reverse repo or longer term reverse repo auction at fixed rate or at variable rate depending on the market condition and other relevant factors. RBI has also had the discretion to change the spread between the repo rate and reverse repo rate as and when appropriate.